Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to have our second collaboration with Steve from Crypto Crew University. We had him on a month or two ago. Everyone seemed to like it. We're going to get some updates, see kind of where the market is right now based on some of the charts we looked at last time. Steve, it's a pleasure to have you on. By the way, if you aren't familiar with Steve, he runs his own YouTube channel called Crypto Crew University. I would encourage everyone to go over to his channel, hit that subscribe button, show some support. He also looks at markets from a very data centric point of view. Take the emotions out of it, right? So check out the channel. Make sure you guys subscribe. Steve, it's a pleasure to have you on the show again.
Great to be here, Ben. I appreciate it. I'm looking forward to it. I saw a lot of comments from our last collab that you and I were their favorite channel. So that's an honor. Hopefully we can inspire some people, provide some education, keep everybody level-headed, and hopefully change some lives.
Yeah. So I think the last time we had you on the show, it was I think Bitcoin was somewhere between $30,000 to $40,000. Somewhere in that ballpark because it was in January. And since then, we know that we went all the way down to 28, 29K, and then we blasted back off to 58K. So I'm sure everyone would love to sort of get your opinion on where we are right now after this major move that we've had.
Absolutely. I have a couple charts to share with everybody. I want to start with this one. So this one looks pretty naked at the moment, but I want to try to solve a problem. And Ben, this was an issue that we had with our last collab. Was essentially this run that we've seen, from 3,000 all the way up almost to 60, seemed faster than the previous cycles and seemed kind of out of sorts. In fact, since 20K, this whole bear market and this move seemed a little strange relative to the rest of the data on the chart. So I want to present a theory. And it's a theory that we actually just started a new Deca-Cycle, a new 10-year cycle. So everybody has heard that crypto runs in 4-year cycles, right? From market top to market top to market top. And everyone's talked about 4-year market cycles, but I don't think enough is talked about our new 10-year cycle, our new Deca-Cycle. So I want to present a theory using a theory. I want to use the Elliot Wave Theory to present why I believe we're more closer, not necessarily to the parabolic move of here, but more closely towards the beginning of Bitcoin, because we're in what could be considered wave one. So I want to dive into that, and then we can touch on more of the present day. What do we think about where Bitcoin is right now? But I want to touch on the super big picture first. So as we get started, I want to touch on some Elliott Wave. Ben, have you guys touched on Elliott Wave at all?
All right, we have not mentioned Elliot Wave Theory on the channel at all, so I'm sure people would like at least a rudimentary explanation.
Sure. So we'll take it step by step. So what I want you to do is come to patterns, and you can come down here to Elliott Impulse Wave 1, 2, 3, 4, and 5. So we'll explain it like super clean and clear, and then I'll show you on the chart how it looks. So Elliott Wave Theory, what is it for? First and foremost, it's basically human emotion and human psychology. It says that the market moves in one direction, and when there's too much emotion, it moves in this corrective wave counter to the trend, which looks like this. So the 5 waves, it starts with wave 1 is what's called an impulse wave, moving upwards. Wave 2 is a corrective wave, right? And when we're looking at it in this Deca-Cycle, the corrective waves 2 and 4 will be during the bear market, right? So wave 3 is often the longest wave, but never the shortest wave. It usually has the most power, always extends beyond the top of wave 1. So you can see wave 1 here, wave 3 extends the top. And again, wave 4 is that corrective wave, right? Moving in the opposite direction of the main trend. So the main trend at this point is an uptrend. And then wave 4 extends, wave 5 extends beyond wave 3, and thus creating the 5-wave sequence. So you have 1, 3, and 5, which are impulse waves, and 2 and 4 that are corrective waves. So in a nutshell, that's the Elliott wave theory. Let me show you what it looks like here on the charts. So we're going to start all the way back at the beginning to really make sense of how this is looking. And then we're going to touch on what's happening down here with the RSI. So we're on a 2-week chart. Why are we on a 2-week chart? Just to keep it cleaner, so you can see these trends in a more of a clean way, and also understand how this 95 level correlates with these market cycle tops. So we'll start down here at wave 1, right? Wave 1 extended up to the glory days of $30 Bitcoin, right? Wave 2 and wave 4, remember, those are corrective waves. They're moving in the opposite direction of the trend. And in the big Deca-Cycle, they always will represent a bear market, right? So that was wave 2. Wave 3, often the longest wave, never the shortest wave, came up to the top here. I will say this, Elliott wave theory, just think about it in simple terms. It's basically human psychology, right? And it is a little bit complex, and there is a little bit more gray area than some other theories, meaning it's up for a little bit of interpretation. So if you're relatively new, less than 5 years trading, don't use Elliott wave to trade. Use it as a tool, because the more tools you have in your toolkit, the better you can understand the market, right? So top of wave 3 here, again, wave 4 is a corrective wave, oftentimes a bear market in these Deca-Cycles. Wave 5, the psychology of wave 5 is the market slows down. Why does it slow down? It's almost like that rocket ship that reached its pinnacle and it needs to turn around slowly and start heading down. So you'll see in true wave 5s that the market really starts to move slowly. It's losing momentum, it's losing power, and it gets to that pinnacle point. What has to happen, which is incredibly healthy, after a true 5-wave sequence is, in simple terms, an ABC correction, okay? So ABC corrections can happen in 2 ways, and I'll show you the basic 2 ways here, and then we'll draw it in. And basically, after that 5-wave sequence, you need a flush out. You need a true correction. So you can come down here to the Elliott corrective waves ABC, right? So ABC 2 ways. One is called a flat. So the A will come down like this. The B will get everybody super excited, right? There was just a major correction. The B, everybody gets excited. They say, this is it. This is the time. And then we turn around and we dump again all the way back down to where wave A went. And this is called a flat, right? Meaning right at the top of that 20K, we come all the way down, we come all the way back up, everyone gets excited, and then we dump down again. The second way is what's called a zigzag. So I'll show you the zigzag. Again, come down here. And the zigzag is pretty close to the flat, but one key difference is wave A is that big correction. Oh my God, what's happening? The world is ending. And then there's a smaller dead cat bounce, right? A bounce that gets everybody excited, but it's a dead cat bounce. It falls over. And a zigzag goes even lower than this point here. Now, that's the basic. Unfortunately, Elliott wave is super complex. There's like 12 variations of each, right, but we'll just keep it basic, right? So that's the flat in zigzag. And I tell you that to show you this. What happened after this 5-wave sequence is we were at this 20K, we had our A, we had our B, everyone got excited, and then we had our C correction here. This flushed out the market, and this almost moved into like a symmetrical triangle, which is another formation of Elliott wave theory, but we'll just keep it basic, the ABC correction, right? Where A and C almost go down to the same price, forming a almost a double bottom, right? And this kind of flushes out the market, and then it starts all over again, right? We are now what I believe to be in wave one, with our new impulse wave starting from this 3K 3100 up here. That's what I believe we're in right now. Meaning, if you look at, we'll just click here to end that. If you look at this wave one, right, and you understand how fast the market was moving, how even in this cycle too, it was still super fast. And we're trying to make sense of, well, why was this sort of out of whack? It was the first time we had an ABC correction.
Right.
It was the first time we actually completed a 5-wave sequence. So again, this is a theory, this is not a certainty, but the way that the charts are presenting and a lot of the rules that go along with Elliot Wave Theory, I believe we have just started a new Deca-Cycle with this one.
I think this is
So
actually. I think this is an interesting theory. I've seen this. I have seen this applied to smaller time frames.
right.
I'm sure you can sort of apply it to whatever time frame you're looking at. But it's interesting looking at it from, say, the big picture, right, the macro scale. That a lot of people weren't even in crypto back in, wave one and wave two and even wave three. So they haven't necessarily lived through that. What's interesting is, you're right, is that our current move that we've seen since about $3,800, that we hit back in March, we've gone up so quickly, and it's been so unlike what we've seen in the last 6 years that you actually do have to go a lot further back to try to find anything that reflects what it's doing now. So, but another interesting thing too is if we look at say the slope or something, the rate at which it was going up back then, it is still slightly diminished, right? It's still going up quicker than it was last cycle, right? It's still going up a lot quicker than it was last cycle. But if you compare, say, our theoretical new wave one to our original wave one, it's not quite as steep. And that, of course, makes sense again because the market cap is a lot higher today. It's going to take a lot more money to move the market.
So we won't know technically for several more years whether this theory is still on point or not, but it's something really interesting to look at. And again, using this Elliott wave theory at the same time as using the RSI and at this 95 level, right? We understand that the top of wave one was above the 95. It represented at a minimum a 77% correction. Anytime we've gotten above this 95 level on the RSI on the 2-week chart, this time, the second time, the third time, the fourth time, all four has been at least a 77% correction, marking the biggest correction in Bitcoin's history were these four. So it's interesting that those four happen to happen at exactly the Elliott wave top and the RSI top, including this piece here,
Right.
which saw that was the lowest. That was the 77%. So it's interesting that wave 5, boom, wave 3, boom, wave 1, boom, and we're close. We're at that 84-ish area, and it's something to keep an eye on. This doesn't say it has to get above 95, although if it does, we need to be incredibly cautious because we look left and we understand there's several data points that illustrate that 95 is an extreme area to be incredibly cautious. So I would venture to say draw this Elliott wave theory, keep this in your pocket, especially the ABC and the wave one, and pay close attention to the 95 level in the RSI on the 2-week chart.
There's a couple things I want to say with respect to that, and I think you hit the nail on the head, right? If it gets to 95, we're it could theoretically go higher than that, right? It's possible that it could squeeze out even more. But the point is to say you always have to manage your risk in the market, and it's like how the risk that you're taking on to squeeze out like just a little bit more. Each person has to decide whether that's worth it or not for them, right? And that's where I feel like every individual person should look into this analysis, like consider the implications and say, well, okay, we've been here before. We've been here, exactly 4 times in the past, and after each time, we saw a substantial correction. And we're not there yet, right? We're not there yet, and we're not saying we're decisively going to make it there. But if we do
Right.
make it there, we have to consider the implications. Another thing I want to mention, I'd like to get your opinion on. So on our channel, so we've done videos on like the 4-year cycle. We've done videos on lengthening cycles, the idea that the cycles are getting longer. And if you look at, say, this Elliot wave, right? The first 5 points you see here, from bottom to top, from say 0 to 1 is shorter than it was for 2 to 3, which was shorter than 4 to 5. Okay, right? Each one was like each preceding one was slightly shorter. Now, something that sort of stands out to me, and I'd like to get your opinion on this. Wave 1 went up very quickly, and then wave 2 was a fairly quick correction. Compared to, say, the wave 4 correction, wave 2 was relatively quick. It was basically just coming back really, really quickly, and part of the reason could be because it went up so quickly, and there was really never looking back. There was no establishing support at various levels that we would then try to fight off later. It was just straight up and then straight back down, but to a higher level than where we started. Now, what I'm curious to hear your thoughts on, and how it could relate to one of the things we talk about, is I think there is some evidence. Like, I think there's some evidence that, we could be nearing a local top, right? A local top, where we sort of cool down for a while. And I've often thought, and again, I could be wrong, right? I could be wrong, but I've often thought there's a lot of data to suggest that 2023 could be a major peak, right? Everyone talks about 2021, and I mean, we're already having an amazing run in 2021. But I'm curious, could you see a scenario where wave 1 is sort of like an impulse wave that takes us to a local top in 2021, or maybe if you want to call it a market cycle top, however we want to call it. But if it went to, say, a quick top in 2021, and maybe well before December, which is what a lot of people, keep throwing out, and then if it had a very swift correction back down, like it did, in 2011, and then another slower run over the next 2 years, could you see something like that happening where, because, if you look back at this chart, the first peak was in 2011, and then the second peak was only 2 years later in 2013.
Right.
So if we were to emulate that, it might correspond to a local top in 2021, followed by a fairly quick and decisive pullback, and then another run up over the course of, say, a couple years to an even grander peak. And then we have a more slow bear market, right, where it's not just like an immediate move down, but it's over the course of like a year or two. Does that make sense to you? Could you see those sort of meshing at all, or what do you think about that?
I think that if you want to be a trader or you want to be an investor, you have to see both sides of the coin. You have to emotionally take your emotion and set it aside and just look at the facts. So we can't certainly say, oh, that's not possible to have some sort of a scenario where we do have sort of an intra-cycle top and a massive 77% correction and then a continuation, or even similar to, we have a similar wave 1 with a dramatic fast crash. And by the way, I think this one was like 90 something percent, and then a continuation. We can't say that's completely off the table, and we also can't say it's completely on the table. What we should do is react to the facts in the charts and keep an open mind and not be emotionally attached to one or the other. And I think that's the key. I do think that there's data to suggest that we won't see this, and then there's data that we just put out a video recently that suggests we could see this. So we have to keep an open mind. With Bitcoin, what it will always do, without hesitation, is the opposite of what everyone thinks.
Right.
And as Ben said, everyone is pretty much chanting that December 2021 will be the top. So my money is on that December 2021 will not be the top. It might be sooner, and that might be the smaller market cycle top, and time will tell. But the facts will be in the charts. We'll be able to tell when we get closer just by looking at the facts. Right now, there's just not enough evidence to say with certainty one way or the other, in my opinion.
Right. Yeah. No, I agree. I mean, if anything, if Bitcoin has taught me anything over the years, is that you have to be somewhat flexible with sort of where you stand, right? You come up with your theories, and then you follow to see what happens, and then you react accordingly, right? To some degree, it's not about what you think will happen. It's about, like, how do you react to it, right? How do you react to a major
Exactly.
move? How do you react to a bear market, right? Do you treat bear market and accumulation phases as phases where you should just completely sell everything and leave crypto, or do you treat it as another opportunity? So it's all about, a lot of times it's about how you react to the market. And I agree. I mean, there's a lot of, I feel like you can sort of find evidence to support any theory to some degree,
Yeah.
if you look hard enough. But there are a lot of indicators that have been developed over the years. We've talked about some of them, and I think for a lot of them, it appears that things are getting heated, right? I mean, and that makes sense because a lot of these indicators are they're fit, or they're designed with prior moves in mind, and we haven't, Bitcoin has not often made moves where it went up as quickly as it has over the last year, right? It just has not happened anytime recently, and so it makes sense that a lot of indicators are sort of starting to get overheated because a lot of these indicators are being put to the test, right? They haven't seen these types of moves in 10 years, for that matter. So it is, I mean, it's an interesting theory, the idea of a new like 10-year Deca-Cycle where, we had, say, 2010 to 2020, and then maybe now this is going to be a long cycle that takes us, 2020 out to 2030 potentially. And if this is our first impulse wave, that'll be interesting. It'll be interesting to come back on the channel in a few years and actually see how
Yeah.
how it plays out.
We'll be back in 7 years to give the update.
Yeah. I'll put it in my calendar today.
Yeah, set a reminder. But nonetheless, it'll be interesting to see how it plays out. And with cycles, let's learn from the stock market, right? The stock market has significantly more data than us, and they generally run on the 7-year cycle.
Right.
But look at the current cycle. We're like 12 years in, and we're still waiting. But there's, within those 7-year cycles, if you look at the bigger picture in the stock market, there's 20-year cycles. There's also like a 45-year cycle that's pretty devastating. So there's bigger cycles within these smaller cycles, just like Elliot Wave can be drawn on the 5-minute chart, and you can draw it on the monthly chart or on the 6-month chart. So
Right. And I've seen people do that.
always,
I've seen people use it on, like, weekly charts and monthly charts. I imagine it's, and maybe you can correct me if I'm wrong. Do you think it's more useful the larger time frames that you look at?
yes,
Okay,
yes,
I would
any
agree.
indicator. That's a golden rule with any indicator across the board. The higher the time frame, the less false signals and the more accuracy.
Right.
So that would be my recommendation. But use this as a tool. Don't use it to trade unless you really focus on mastering and only trade with that, which it requires a lot of focus. So that's our first chart. That takes a little bit of a bigger approach. Should we move to the second one?
Sure. Yeah. Sure. What's the second one on?
The second one is also a very big picture concept, but it's one that will stress the most significant trend line in crypto, in my opinion.
Right.
And it's a 10-year or 11-year trend line that has proven to be the most significant. And we'll take a look at it from this angle. So it started really back in November 2010, right? Holding some resistance. We also held some resistance fast forward to 2011, and then we broke it. Oftentimes you'll see whenever we break a significant level on any time frame, more often than not, we'll come back to revisit it. No matter how high we go, if it's significant, we'll come back to visit it again to confirm it as support, which we did here in 2011. And usually when you do, it will oftentimes get bought up if it's going to act as support. And that's exactly what happened here. And we continue to see a bounce. So now we move into 2011 through 2012, and we're still holding it as support, right? Through this time period, still holding it as support. And since we got that bounce, we started to see more strength come into the market. There was more certainty into the market, and there was more euphoria in the market. So we saw a little bit of a bigger move come from our main trend line here. And again, once we have that large move, what do we generally do? We come back and we really need to test our support over time, right? Even if we see something like this, which happened in 2013, where we went really extraordinarily a lot higher than anyone imagined, we still have to pay respect where respect is due. Even you can see the gap now widening, and you can see where we've came from so far, but we still came all the way back down, holding some support through this period here in August 2015, and with long wicks, right? And then really holding support with this wick here in 2016, and then holding it through this whole period of 2017 through March of 2017, back to this exact line that has proven to be pretty substantial. I mean, we need to pay attention to what's in front of us here, right? We came from this resistance. Now it's been support since 2011. So for, 6 years in front of us in each of the bear markets, this has been the main level, right? So now let's see what's happening today with this trend line. So we got some support. We had some long wicks. We started to get some confidence in the market that we were going to hold this key level, and especially through this period of September 2016 all the way through March 2017. And then we started to see a lot of confidence come in. We got a large bounce from this level, and we went up to this 20K area, right? Which we all remember, this 20K area. And again, since this level was so important for Bitcoin's entire life, no matter how high we go, we have to come back down into testing. We need to confirm that it is, in fact, still support. We tested it through this period here in October 2018, but for the first time in Bitcoin's life, and we actually covered this in our channel live when we broke this. This is actually when we had the 3-day death cross as well. We broke this for the first time ever. So we have been holding support for years at this level, and we broke it. And when you break support, it simply becomes resistance. It's really that simple. Support and resistance, if you understand it in the minute details, you can understand any indicator on planet Earth, because all indicators are based on support and resistance of that indicator with reaction to price. So we broke it. It was resistance. We came back down to this 3,000 area, and then we battled all the way back up and were rejected. Why were we rejected? It's resistance. It was support for many, many years, and now it's resistance. And this time it was resistance was pretty long wicks. Anytime you see these long wicks, the wicks tell the story, the bodies tell the facts. And this it got sold off very heavily into this, what I believe to be the most significant trend line in Bitcoin. So we got rejected very heavily because of these long wicks. There was just a lot of pressure pushing us down. It took a while to really pan out, but you see these long wicks here, they were bought up, and there started to be a shift in momentum. That's where we believe that this ABC finished, that this new wave 1 in the Deca-Cycle started, and we absolutely tore through the roof. And now we're battling up into this area, which could be very heavy resistance. It was very heavy resistance many years ago, and prior to that, it was incredibly strong support for upwards of 7 years. So right now, in this week, if Bitcoin were just to have an absurd rally, where are we looking right now? We're looking upwards of 82,000, pretty respectable. And obviously, every week it's gaining ground quite rapidly. So if we fast forward, for example, until May 10th, we're looking at 100,000 Bitcoin. But this will be a very, very critical level to watch. It could be a level that catches everybody by surprise. Ben, if we do have this, intra-cycle high that catches everybody with a large correction, look at the resistance that we saw last time from here. This could be something that could cause an intra-cycle high and a really sharp decline.
Right.
And this is something to keep in mind as we progress into what could be our cycle top.
Right. Yeah, no, it's interesting because I mean, as we have some indicators on the channel too that are similar, but I've seen this trend line before. I was curious where it actually peaked out at. So it looks like, yeah, like if it were to go there this week, it could be 82,000. But if it were to say take another 2 months, then it could be putting it at say over 100K potentially, or around 100K. So I guess in terms of a theoretical top, maybe time is on our side, right? The longer it takes, maybe, and if we were to make it back to this trend line, right, which is a big if, of course, but if we were to make it back to the trend line, then of course time is on our side. Thanks for walking us through that. It's fascinating to sort of like walk through it year by year and see it be support and resistance, year over year.
Yeah, it's oftentimes the simplest charts that will stay in your memory and really connect with people. I think a lot of times and maybe someone at home has this feeling that they need to make the chart so complex with 7 different indicators and all sorts of arrows, and it may feel comfortable to do that, but it's oftentimes the simple charts that will give you more clarity, more confidence trading, and that's what I would recommend.
Yeah, I mean, we like to focus on macro stuff here, and I know you do as well, which is why I like having you on the channel, because you sort of look at the macro, you look at the same thing we do, right? You look at the data, and we look at the data on this channel, you look at the data on your channel, but the great thing is that we look at it in slightly different ways, right? It's always how you interpret the data. Like, if the data's there, how do we interpret it? And looking at, say, a macro trend line, I think people are really going to appreciate the lesson on Elliot Wave Theory, right? I think that'll be eye-opening for a lot of people to see that displayed in a macro picture, not say a daily or a weekly picture. Hey, let's look at it on a 10-year time frame and see what it looks like with Bitcoin, and then like the ABC correction, and then the idea that what if this is our impulse wave for another 10-year cycle. I think this is fascinating. I really appreciate you coming on the show and presenting these things. I would like to remind people that if they like this content and you want more of it, go over to Steve's channel, right? Go to Steve's channel, hit that subscribe button, and he'll walk you through a lot of different things. Like he'll look at the data, present it in a different way than I do, or at least interpret it in different ways. And I can vouch for Steve that he does things. He sticks to the data. Get the emotion out. The emotion is not going to serve you well, especially in cryptocurrency. It's not going to serve you well. So yeah, Steve, thank you for coming on the channel. I really do appreciate it. Thank you for educating people on Elliot Wave Theory, and I look forward to having you on very, very soon.
I will say subscribe to Ben's channel. Subscribe to Ben's channel.
Everyone subscribe to my channel as well. Thank you. All right. Bye, Steve.